Here with us on set is Strategas Chief Market Strategist Chris Verrone. Chris, it's been a blistering run.
Yeah.
But one that hasn't been filled with massive upside volatility. It's been kind of like that melt-up approach. Incremental highs all the time in almost a straight line. Is now the time to keep that momentum going and play that momentum, or to be a little bit more cautious about these sets of record highs?
Well, listen, we know where we are, Dom, with the calendar. It's the middle of September. We know September's reputation as not being one of the strongest months. Internally, the last week or so has been a bit lighter than we would have wanted to see. But listen, at the end of the day, the equal weight S&P is at new highs. The leadership is still very much banks, discretionary, industrials to a degree. I think it's difficult to get too worried so long as that is the backdrop. What I'm interested in is there may be some shifting macro winds when you look around the world. I mean, we should be paying attention. Copper broke out last night. Aussie dollar is turning up. Is there some actual maybe global growth reacceleration in front of us here?
Those were all, I mean, you look at the commodity currency type trades, right? You look at Australian dollar, the Canadian dollar, that sort of thing, those ones that are economically sensitive. They are all pointing to more positive momentum ahead for risk type assets. It's a consensus trade now at this point. Isn't that cause for concern in and of itself?
I'm not sure we can call it a consensus trade when the material sector is 2% of the S&P. And I mean, Aussie hasn't worked in 2 years, and you're just beginning to see these Chinese stocks break out. Nikkei, as we know, just broke out. Kospi acting well. So I think we're still relatively early in the consensus embracing what seems to be a reignition of global growth here. And the question I would have, well, does that mean the Fed's going to cut into this? And if the Fed's cutting into some reignition of global growth, what does that mean as we look forward for rates? What does it mean for dollar and so forth?
All right. So as you take that macro kind of big picture and then kind of funnel it down to where you think, given those assumptions, we could see some of the juicier returns in the coming weeks and months. What setups look good to you?
I think there's three things of importance here. I'd say number one, you're beginning to see some life get breathed into these copper stocks, whether it's Freeport or Rio, or we've had Vale turn, Cleveland Cliffs, which is steel, is actually turning here as well. So you're beginning to see some life there. I think that's notable. The second thing I would just say, it's important this resurgence in materials or commodities is not happening at the expense of the consumer. And we're not seeing that yet. Consumer discretionary continues to act well. I get more uncomfortable when discretionary is faltering at the expense of, say, materials or resources. And then maybe third, after a 8, 10, 12-week pause, all these power stocks are getting back in gear. You're seeing it with CEG and Vistra, GE Vernova, even what I would call AI-adjacent names, Quanta and the infrastructure stocks are seemingly getting back in gear here after a 2-3 month pause.
All right, so the AI power, data center power trade is the pause that then refreshed.
Listen, they took 12 weeks off. You had very good, potent signals there yesterday. I think they're back in gear.
All right.